There are many crypto, blockchain, and Bitcoin concepts that you would keep hearing every now and then. Bitcoin halving is one such concept you keep hearing about every 4 years. Halving is said to precede a big bull run in Bitcoin. Is that true? If so, why does halving cause it? Today we will understand the phenomena of Bitcoin halving, the economics and engineering behind it. Bitcoin is a system that is worth over $1 trillion today and has been functional in a decentralized manner since 2009. That is no joke. And you cannot begin to understand this phenomena until you know what is the halving. Bitcoin was made to be a decentralized currency that cannot be controlled or manipulated by any central party. By leveraging cryptography, and if cryptography is a difficult term I understand, let's just say advanced maths and encryption technology. The power of open internet combined with this cryptography, a digital asset called Bitcoin was made. On a side note, I want to acknowledge that we often call Bitcoin to be a cryptocurrency, but I think a more apt term for it is digital asset or crypto asset. Bitcoin's decentralization means that things like printing of new money, blocking someone from transacting on the network, or even holding certain assets are in theory not possible. It is not permitted by the Bitcoin blockchain principles to interfere with transactions like how a normal central bank or government would do. In fact, the anonymous maker of Bitcoin, called Satoshi, in the very first Bitcoin block referred to an article titled "Chancellor on the Brink of Second Bailout for Banks." This article was about the bailout of banks after the 2008 crash in the financial markets. Satoshi, in his own way, registered his protest against money printing by governments. So what is halving? Halving in simple terms is the reduction of supply of new Bitcoin in the market. Do note that Bitcoin is different from cryptos that you usually hear about, and almost every crypto you see out there has its own issuance schedule, own new technology maybe, and own way of working. Halving is pretty much a Bitcoin phenomena. If I ask you, how is gold produced? You would say, mining. But if gold can be mined, why is it valuable? It is valuable because it is extremely hard to extract. It is rare to find and costly to ultimately mine and bring to the market. On a side note, gold has held its value for over 5,000 years because it does not rust, making it a reliable store of wealth through various civilizations. Its malleability allows artisans to craft intricate designs, while its ability to be reshaped, melted, and repurposed infinitely ensures that its value remains intact across generations and economic fluctuations. In the case of Bitcoin, its value is underpinned by a decentralized production system governed by software protocols, which ensures that no central authority controls its creation or distribution. Unlike traditional currencies subject to inflationary pressures, the total number of Bitcoin that would ever be produced is fixed at 21 million, a fundamental aspect of its design. This scarcity, combined with growing adoption and demand, enhances Bitcoin's value proposition as a digital store of wealth and medium of exchange, offering users a hedge against inflation and sovereign risk in an increasingly digitized global economy. But how does these 21 million Bitcoins get issued? And hey, you still haven't got to the halving. Every 10 minutes, a new Bitcoin block is mined as a part of the decentralized process that underpins the Bitcoin network. While mining may seem like a technical term, it essentially involves validating and recording transactions that occur within that time frame of 10 minutes. These transactions are grouped together into digital blocks, which are then added to the blockchain, which is basically a distributed ledger, a copy of which is maintained by almost anyone who wants to do it. So thousands and hundreds of thousands of people maintain a copy of it. Miners compete to solve complex mathematical puzzles in a process known as proof of work, which requires substantial computational power. Once a miner successfully solves the puzzle and validates the transactions in a block, they are rewarded with newly generated Bitcoins. along with any other transaction fees associated with those transactions. So many people are mining together. One miner wins this, or a group of miners together win this, and they get to place the next block in the blockchain, and they are rewarded with newly generated bitcoins. This is the only way new bitcoins are generated. The issuance of new bitcoins is predefined and limited by the Bitcoin protocol. We will of course talk about mining and security of Bitcoin ecosystem and contrast it with other cryptos in future videos. In 2009, the Bitcoin network initially produced 50 new Bitcoins every 10 minutes, which basically means 7,200 coins daily. However, the protocol is designed to undergo a halving event roughly every 4 years, or technically speaking, every 210,000 blocks later. During each halving event, the reward for miners is cut in half, which means the issuance of new bitcoins is cut into half. The number of bitcoins created per block decreased. In 2009 it was 50, in 2012 it became 25, 4 years later in 2016 this became 12.5. And in 2020, this became 6.25. With the 2024 halving, this number comes to 3.125 bitcoins per block. Now you may be wondering, how is it that 3.125 bitcoin is issued every 10 minutes or with every block? Well, it is crucial to note that each bitcoin is divisible into 100 million smaller units called satoshis. As of 2024, with only 3.125 bitcoins generated per block, the total daily production stands at 450 bitcoins. While the rate of Bitcoin production is slowing, it's important to understand that the final Bitcoin will not be mined until approximately the year 2140. However, the vast majority of Bitcoins have already been mined, with approximately 19.6 million of the 21 million Bitcoins already being in circulation. This gradual and controlled issuance of new bitcoins contributes to Bitcoin's scarcity and value proposition as a digital store of wealth. Halving cuts the Bitcoin production by half every 4 years. The impact of halving event on the Bitcoin price is a significant aspect of its economic model and market dynamics. By implementing a predetermined issuance schedule, Bitcoin's protocol establishes a transparent and predictable supply mechanism. The impact of halving event on Bitcoin's price dynamics is multifaceted. Initially, the anticipation and awareness of the impending supply reduction often leads to increased market speculation and buying pressure. This heightened demand, coupled with the reduced supply of new Bitcoins entering circulation, creates a supply-demand imbalance, driving prices upward. Following the halving event, Bitcoin has historically experienced periods of intense market volatility and price fluctuations. While the immediate aftermath of halving may witness sharp price increase and speculation, price correction and retracements of up to 80% from peak levels have been observed in previous cycles. Despite short-term fluctuations in market cycles, the long-term trajectory of Bitcoin's price has generally exhibited an upward trend. But will this trend continue after the 2024 halving? I think we should not take it as a given. While past performance and historical data provide valuable insights into Bitcoin's price behavior, it's crucial to exercise caution and avoid undue speculation. Bitcoin's price is influenced by many factors, including market sentiments, regulatory issues, scams, hacks, macroeconomic trends, and other innovations happening around the world. As an educator, my objective is to provide clarity and understanding of Bitcoin's fundamental concepts, including the halving event, its impact on supply dynamics, and broader implications for cryptocurrency ecosystem. I hope this bit about halving and how Bitcoin issuance works helps you understand Bitcoin blockchain slightly better. Do let me know in comments if you have any questions.